I was thinking about my investment in JD.com, and it made me think of the concept of call spreads. And some of my investments, I am going to get a 100% return by January 2019 or January 2020, depending on when the call spreads expire. So I thought I'd make a quick video explaining exactly what a call spread is, because in some scenarios, like in my investment in JD.com, I think owning a call spread is the far better choice. So I will make this video assuming that you already know what a call option is, okay? So my call spread is basically buying one call, and for JD it was a strike price of 30, and selling one call at a strike price of 40. So at the time I did this, JD was trading for about $36 or $37 a share. So if I were to buy the stock, let's just say it was $36 a share. If I were to buy the stock, 100 shares would cost me $3,600. And if it went up to 40, then I would make $400. So by buying a call spread, I am buying the $30 call and I'm offsetting that by the price of the $40 call that I'm selling. So the net result of that $10 spread only cost me $5. So by getting it at $5, it's very, very similar to me buying JD at $35 instead of $36. So JD is a stock that I believe is absolutely going to be worth more than $40 a share by January of 2020. So I thought this was a good, safe company to do this with, and I feel like, in my mind, I'm kind of getting it for a little bit cheaper than other people are getting it for. So with this call spread, I can make $500. But the upside, one of the theoretical drawbacks, I don't even know what to call it, is that let's say JD goes up to $50 a share. By owning the stock, you continue to benefit from the upside. But by buying a call spread, anything over $40, and it just doesn't affect me anymore. I just want it to be over $40. So I don't benefit any further as the stock price continues to go up. So I don't only want to make $500 in this trade. And one of the big reasons is just because my time that I spend thinking about stocks, I value that time. And I think my time is worth a lot more than $500 over the course of 18 months. So I decided to buy 8 of these call spreads. So I bought 8 $30 call options. I sold 8 $40 call options. The net result that I spent was $4,000. And when JD finally expires, when JD finally goes over $40 a share, and it is January 2020, then my $4,000 worth of call spreads will be worth $8,000. So what I'm doing is I'm making a $4,000 investment, and if it expires, if JD ends up going below $30, then I'll lose the whole $4,000. And if it goes above $40, then I will make $4,000 profit. So it's almost like a coin flip. It's like I could either lose $4,000 or make $4,000. But the reason why it's so much better than a coin flip situation is because JD is growing so quickly. This is just a growing company. If you look at any growing companies over the long term, and 18 months is like the beginning of a long-term investment. If you look at any of these companies over the long term, they're almost always up. When you look at good growing companies that have good management and they're really focusing on growing revenues, these companies are almost always higher than they were 18 months ago. So I almost feel super confident that JD will be $50 or $60 or $70 a share a few years from now. But I'm not taking that much of a risk because I only need it to be over $40. And at the time of making this video, it's a couple weeks later, and JD is already over $40 a share. So I basically don't even need JD to go up anymore. It can actually go down $1 a share, and I would still make 100% return on my money. So I like being in this situation, and I think that if you are somewhat experienced using options, call options in particular, I think this is a very good weapon to have in your arsenal, because making 100% return on your money in any time frame is a pretty good feeling. So hope I could help you learn something, or tell me what you think if you have any good call spreads that you're into or anything like that. All right, thanks for watching, thanks for subscribing.